Top analyst Katie Huberty is out with a note today signaling the iPhone maker's China woes may be softening. Shares, there you go. The highs of the day. It's our call of the day. Katie Huberty, of course, Morgan Stanley, Pete's favorite analyst.
Yeah,
that means
been right a long time.
That means you get it first.
All right, well.
Overweight on the stock. 197 is the reiteration of the overweight.
Yep, and she's been on. She's had her moments where things have absolutely slipped. There's no doubt about it. I think this market share thing and the changing of prices, Scott, over in China with some of the phones, that absolutely was something that actually picked up. And then you look across at different areas of the market, but wearables is still my focus. Everybody else still wants to go to the services. That was a story years ago. That's actually playing out now. I think wearables continues to be the story. You look at the revenues, you look at the growth of what's going on in that particular category for them right now. There is growth at Apple, and it's down on the downside on the lower 20-some-odd percent, 25% or something like that. But the big animal is iPhone, so they're still focused on that. They had to change those prices. They did, and that absolutely worked.
Do you think that's enough for the stock to advance from where it is right here?
It's too cheap. They've got all that cash, so for all those reasons, yes. They're set up right now, and I think if you do focus on the other big two, the services and wearables, but particularly the growth coming, the wearables growth is really unbelievable. I mean, and she talked about the second half of last year. Had they kept up, and this was a mistake by Apple, had they kept up and had enough available, their numbers would have been even better, but they didn't.
So the stock's gone from 140-something to 183.
Yep.
Right? Buffett has come on and suggested that if the stock goes lower, he'll be a buyer of more.
Yeah.
Does anybody? No, but no one thinks there's a Buffett.
But it was there and he didn't buy it.
But no one thinks there's a Buffett. How do you know he wasn't buying more at 140, whatever?
Because it was asked.
But you don't think there's a Buffett backstop on this stock?
Stock's too big. Not in Apple. The stock is too big. I think that you could have the same condition that you had.
But he could have easily said, well, our position is full. He suggested that if it goes to a more attractive level, he'd be a buyer of more.
Any stock that Warren Buffett owns.
That's him saying it, not me.
But any stock that Warren Buffett owns, if he says it goes lower, he wants to buy more. That's the basis. That's the philosophy.
Well, he could have said we own billions of dollars worth of Apple. We're not going to buy anymore. We're happy with our position. He didn't.
No, but he says that about every stock.
I don't understand. Should I buy the stock because it may go down to 150 and Buffett's going to step in? Is that my investment case?
No, but I'm suggesting maybe you missed your opportunity anyway.
I own it.
I'm saying if you're not in it, right? Okay. We'll turn to Jim Lebenthal. Sure.
Oh, no. There you go.
Yeah. Before you turn to me.
Speaking of missed opportunity, I own this stock. I the regular thing.
No. Listen,
wait a second. Write it for you.
I'm not going to let you do this to me every time. Okay. I sold the stock in November at 203. Okay.
Wassler Capital Advisors told you to buy it back below 150.
Well, that's great. Who knows? We may get another opportunity. I still own
Just
shares.
Hold that up below you. They'll hold it up.
Stop it.
It says, Jim, I own Apple. We'll save the deco.
All right. What do you got, buddy?
I'm saying, okay, the stock.
All right, Judge.
Do you think you get another bite at the apple, so to speak?
Yeah, I don't think it goes. I don't think it
good.
goes back down to 150. I think it's fairly priced right now. I read the Katie Huberty note. I need
my notes back.
Oh, okay. All right, just make sure you put the right side.
I was going to sacrifice them only if you held it up, but you didn't.
Look, okay, so things are stabilizing in China. That's great. They have 9% market share. I mean, they've been kind of decimated over the last couple of years in China. Stabilization doesn't do it for it. Not buying the wearables argument. But if you want to come at me with the services argument, that's the reason I'm still in the stock, albeit smaller than when I sold at 203.
Just remember this, though. When you say that about wearables, that's what people were saying about services just 2 years ago.
Yeah, but we've been talking.
This is growing at an incredible rate.
Wait. We've been talking about wearables. We've been talking about wearables, you and I, for at least 3 years.
Yep.
Okay, the services has performed.
Yep.
We've been talking about the wearables. It's been watching paint dry. It just hasn't happened. I think it's 16 times forward multiple. Strip out the cash, you got about a 14 and a half multiple. That's the right price for the stock. If it goes lower to 150, sure, I'll buy some.
I agree with that, but I think the next step in services, and I put them as services, is their entertainment offering. Their movies, their television, streaming, how well they do there.
Okay.
They've had execution issues, which you can't deny in AirPods and in other wearables. 2 years late in the AirPods and 2 years late in the next
That's fine,
version.
but let's just discuss what it is. The stock's up 20%, okay? Well, whatever it is, 20-something percent from its low, right?
Yep.
Did you miss your chance if you didn't bite then?
Yes,
I think you missed
your chance.
Yes,
but it doesn't mean you won't get it again, to Jim's point. You might not get a chance to get it again that cheap. But where I'll push back a little on you, Joe, when you say, well, it's too big for Buffett and this and that, and he can't move the stock. You've got 9.5 billion, if memory serves, shares of Bank America. All he has to do is say, I'm sitting here in my bathtub, and I decided maybe I'll call this guy and buy some of his stock.
So you think there's a Buffett backstop?
Oh, hell yes. And all he's got to do is say, it's looking very attractive here at this level. And if he does that, Judge, then he doesn't have to buy it. He just has to say it.
Well,
that's part of my point.
Okay,
you don't agree with that?
I don't agree with that, because if it goes back below 150, there's a bigger problem, whether it's something related to the market, whether it's something related specifically to Apple itself. And again, listen, everyone, and this is where, and I'm not giving Steve a hard time, you know this, everyone's a closet indexer. So basically, at the end of 2018, you had all these portfolio managers that took down their holdings of Apple, and now they're rushing back in again. Why? Did they see anything about the company except that earnings exceeding the expectation? So they're just looking at the index itself. They see a big weighting. They're getting back into Apple. They run it up to 183, okay? If you get an environment where you're back down to 145, 150, you're going to see those portfolio managers, again, they're going to be selling it. And I just don't know if Warren Buffett alone is enough to absorb that.
I think, though, I think one of the issues, though, over the last several months has been concern about losing market share, particularly in China. So I do think that that is a little bit of a game changer to hear that actually they are not losing share and actually might be gaining a little bit of share in China. I also think over a long arc, if you look to 5G transition, that should also be huge for the company. Now, it's not going to happen this year, but it's an out-year phenomenon that could drive the stock higher as people are forced to buy new phones.
All right, we'll make that the last word there on Apple.